Massive news for Starbucks shareholders. Why is that? Well, Chipotle CEO, which of course is bad news for Chipotle holders, but Chipotle CEO is stepping down and joining Starbucks. He will be the new Starbucks CEO. Of course, great positive reaction for Starbucks stock. It's up 14% before the market opens. Year to date, before this was announced, Starbucks was down 18%. It will be down 7%, 8% right now, year to date. Overall, Starbucks has performed badly. Not just the stock, but the business itself barely growing in fiscal year 2024, top and bottom lines. But hopefully with this change in management, things will be looking a little bit better. We're going to go over the two announcements, two comments, one from Starbucks, one from Chipotle, a little recap of what both companies have reported for the latest quarterly figures, and then we're going to look at the graph. Of course, do share your thoughts down in the comment section below. I know some of you own Starbucks, some of you own Chipotle, so let me know what you think about this in the comment section below. If you like these types of videos, leave it a thumbs up, subscribe if not. We're less than 100 subscribers away from 50,000 subscribers, so thank you very much for all the support. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I first want to touch on Starbucks, the stock, right? It's a company, it's a stock that pays you a nice dividend, has a dividend yield of 2.96%. Overall, forward PE, EV to EBITDA, price to sales, price to free cash flow is all lower than its 5-year mean by quite a lot. But previously it was higher because the business was performing better. So again, just focusing on these metrics does not tell you the full story. Sometimes these things might seem cheap, but then you get a horrible quarter with horrible guidance and suddenly these things become quite expensive. If we look at Chipotle, for example, the stock, of course, is a more expensive stock, right, on all of those metrics. But it is a company with industry-leading margins. So you are paying a premium because this is a premium, let's say, brand or a premium choice, a premium business, shall I say. Overall, comparing both of those companies, just looking at their valuation metrics does not tell you a lot. You have to look at how the business is performing, you have to look at the profitability profile, and all of that. I've covered Starbucks and Chipotle in the past. If you missed those videos, those will be in the top right corner. Now, is Chipotle going to continue to perform well with a new CEO? That's the question, right? And that's why the stock is down right now. Currently, at the time of making this video, stock is down 7.6% or so. Year to date, the stock was up 22%, so now it will be down closer to 16% or so, 17%. Still okay. I mean, it's not cheap. It's an expensive stock. It's a company worth $76 billion. But as you can see here, it is expected to grow faster than Starbucks. Faster and higher margins, that gets you a premium. And so let's go over the first announcement, the one coming from Starbucks. So Brian Niccol will join Starbucks on September 9. Melody Hobson will be the lead independent director. Laxman is stepping down as CEO and as director, effective immediately. Rachel Ruggeri will serve as interim CEO until September 9th. So they talk here a little bit about his performance at Chipotle. So Niccol has transformed Chipotle. His focus on people and culture, brand, menu innovation, operational excellence, and digital transformation have set new standards in the industry and driven significant growth and value creation. Revenue has nearly doubled, profit have increased nearly sevenfold, and the stock price has increased by nearly 800% during his leadership, all while increasing wages for retail team members, expanding benefits, and strengthening the culture. We are thrilled to welcome Brian to Starbucks. His phenomenal career speaks for itself. Brian is a culture carrier who brings a wealth of experience and a proven track record of driving innovation and growth. Like all of us at Starbucks, he understands that a remarkable customer experience is rooted in an exceptional partner experience. Our board believes he will be a transformative leader for our company, our people, and everyone we serve around the world. As for Brian, he said, "I'm excited to join Starbucks and grateful for the opportunity to help steward this incredible company, alongside hundreds of thousands of devoted partners. I have long admired Starbucks' iconic brand, unique culture, and commitment to enhancing human connections around the globe. As I embark upon this journey, I am energized by the tremendous potential to drive growth and further enhance the Starbucks experience for customers and partners, while staying true to our mission and values." So, of course, if you look at his track record at Chipotle and you look at the state of Starbucks today, you cannot say anything but be excited, right? Again, being excited does not mean that it will eventually work out. There's lots of new things to, well, figure out at Starbucks. I would say it's a bit like Alex Chris coming into PayPal, right? PayPal, it's a global brand, renowned brand, but the company was not doing well. Alex Chris came in, changed the whole management team, took a while until he got things going, but things are getting better and better. I think you could expect the same thing happening at Starbucks. Of course, it's a more consumer-facing brand, coffees, drinks, treats, whatever. So it's a bit different, but I get the same sentiment. I hope you understand what I'm trying to say here. As for Chipotle, they basically have here a title. Chipotle announces CEO departure. Scott Boatwright, COO and 7-year Chipotle veteran, named interim CEO. Jack to remain with company as president, strategy, finance, and supply chain. This was someone who recently announced his retirement from Chipotle in 2025. He has agreed to remain with the organization independently as president of whatever we just mentioned to ensure a smooth transition. So, of course, they are promoting people that already worked in Chipotle to ensure that, well, they can stay on track right now until they actually find a real, let's say, new CEO, because right now it's an interim CEO. Okay, let's wait and see. The comments here are as follows. With the leadership change, Scott Mao, Shopify's lead independent director, has been named chairman of board, effective immediately. Thanks to our robust talent planning process, we are well prepared for events like this due to deep bench within the organization. This is very important. The board is excited to see other strong leaders expand their roles and provide growth and development for more people in the organization. This is where we're basically going to see how much influence, how much power the CEO actually had at Chipotle. Scott Boatwright, the interim CEO, says, I have the utmost confidence in our 5 key strategies, and I'm excited for the new opportunity to lead the business forward. We have a world-class organization full of talented leaders who are passionate about our brand and purpose and excited for the long-term opportunity to grow these 7,000 restaurants in North America and expand internationally. And so if you missed last quarter's result, this is a very, very quick recap. So total revenue increased 18.2%. Comparable restaurant sales increased 11.1%. Operating margin was 19.7%, an increase from 17.2%. And restaurant level operating margin was 28.9%, an increase of 140 basis points. So overall, a pretty good quarter. In the second quarter, they also repurchased $151.4 million of stock at an average of $63.5, which of course is higher than the stock we're at today, where the stock price we're at today. They still have $647.7 million remaining available under the share repurchase authorization, including an additional $400 million authorized in June 2024. So like I said in the Chipotle video, it was a good quarter. Even if the stock went down, it was a good quarter. The stock also split. Usually the stock runs up until the split happens and then the stock goes down a little bit. Probably somebody knew already something about this CEO shift. That's why we're probably seeing some weakness there. There might also be a weakness in the overall restaurant industry. People go out less because, well, it costs more money. Economically wise, not everybody has the amount of money needed to survive these days. So things like Chipotle, things like restaurant brands, whatever, McDonald's, all of them took a small hit. As for Starbucks, this was basically their last quarterly figures. So global net revenue increased just 1% year over year. Comps globally down 3%, North America 2%, internationally down 7%, and China down 14%. As for non-GAAP global operating margin, 16.7%, down 70 basis points year over year. Non-GAAP EPS down 6% year over year, but global store count is still up 6%. So this is basically the opposite of Chipotle, right? They're not growing fast, margins are coming down. That's not what you wanted to see. As for the fiscal year 2024 guidance, they expect comp growth globally, low single-digit decline to flat, same for US, and China actually single-digit decline. As for new store growth globally, around 6%, US 4%, and China 12%. Global revenue, low single-digit growth. global operating margin flat, capital expenditures around $3 billion, and full year EPS gap flat to low single digits, and the same for non-GAAP. Last quarter, if you've seen the Jim Cramer interview, well, he basically roasted the CEO, was one of the worst quarters we've seen in a long, long time. And so right now, looking at the Starbucks stock, pre-market, the stock is back over the 200-day moving average, which sits at $85. So let's see if we can stay above that. Yes, probably. It did bottom around $70 or so. Okay, you think you might be too late. It's true that the stock is up a significant amount, let's say, since that bottom, but the business hasn't changed much. So most of the reasons, if not all of the reasons why the stock is up a lot right now, is because of the anticipation of what might happen in the future. As I've said in the previous videos, for Micron, for example, yes, I know Micron, completely different industry, right? But from a buying a stock standpoint, it's a bit of the same. You want to buy near the bottom, peak pessimism. You want to buy when margins are down, when EPS is down. You don't want to buy when things are extremely high and margin expansion has already happened. No, you want to be at the start of a new cycle. Could it happen with Starbucks? Maybe. I mean, the new CEO has a quite good track record, and Starbucks is still Starbucks, right? World-renowned brand. So with good leadership, I think things could get much better. You also get a nice little dividend, so at least there is that. As for Chipotle stock, the story is a bit different. We were over the 20 and the 200-day moving average. Now, pre-market, we're going back down. We had that rebound here around $50 or so, two nice green candles, and now we're probably going to get a pretty red one. But of course, it remains to be seen if the CEO change is going to damage, let's say, this company's future records, right? Future track record. Right now, it's still a very, very good brand. I don't think that the folks at Chipotle have no clue how to run that business, but the market doesn't like uncertainties. And right now, there are uncertainties with Chipotle, less so with Starbucks. Although, if you just look at the company's performance, Chipotle today is still performing better as a business than Starbucks. But the markets are always forward-looking, and right now the market predicts that Starbucks will be doing much better compared to what it has been doing in the past. So overall, that's all you need to know. Starbucks pays you a nice dividend. The story of what will happen in the future with the new CEO is still TBD, remains to be seen. Could it be a good buy? I mean, yeah, it could be, could very well be. Does that mean that you have to sell Chipotle? No, until they show you any indications of them not knowing how to run this great company, I don't see why you should be selling Chipotle. So that's what I've got for you today. Do share your thoughts down in the comment section below. Like, subscribe, do hit all the buttons, and I'll see you all in the next one. Bye-bye.